Hello, I'm Jaspreet, Company Secretary, and today I want to share with you about Sebi Listing Regulations Amendments, Sebi LODR Amendments, which came on 14th June 2023. Certain provisions are applicable from 14th June 2023 itself. Certain are becoming applicable from 13th July 2023. So I will share with you my personal notes. I will walk you through my personal notes based on best of my understanding. And if later on I find that I told something which is incorrect or my judgment has changed over time, then I will put my comments in the description box. So along with the video, I suggest you to go through the description also, and in case you want the PDF also, you can email me and I will share with you the PDF as I'm sharing with you right now. So I think it's good for the start, and let's directly jump into the LODR amendments. All the best. Okay, so here we are with my personal notes on Sebi LODR amendments, which have come from 14 June 2023. So let's walk through the four provisions which are effective from 14 June 2023 itself, and then we will walk through other requirements. So effective immediately. Regulation 15(1)(a). For listed specified securities, that is NCDs, non-convertible debentures with value 500 crores or above, timeline for comply or explain extended till 31st March 2024 from 31st March 2023, and thereafter will become mandatory. Many of listing compliance is applicable to equity listed companies shall become mandatory applicable on these specified securities like board composition, various committee, vigil mechanism, RPT related, corporate governance, secretarial audit, senior management obligations, etc. Next is Regulation 34(2)(f), Annual Report. So here is, earlier it was mentioned that for top 1000 listed entities, it was mandatory to provide in annual report a business responsibility and sustainability report on environment, social and governance disclosures in the format as specified by SEBI. This same is retained with minor modification in language. Further, it is added that an assurance of BRSR code shall be obtained. However, when and in which form, this will be specified by SEBI. Further, that similar BRSR core shall also be obtained for their value chain. Here also, when and in which form, this will be specified by SEBI. Also, the term BRSR core and value chain shall be specified by SEBI only. Next is Regulation 37A. It is sale or lease or disposal of an undertaking outside scheme of arrangement. So we already had Regulation 37 which related to draft scheme of arrangement, which was required to be first filed with stock exchanges for obtaining no objection letter. Now for similar matters other than scheme of arrangement, Regulation 37A is inserted. If listed entity sell, lease or dispose of whole or substantial undertaking, then it shall pass prior special resolution by public shareholders. And now here is a catch, who are not related to such sale, lease or disposal. That is special resolution by unrelated public shareholders. Notice of general meeting to disclose commercial rationale and the use of proceeds. So here is that notice which we will provide, the explanatory statement in the notice of general meeting. We will have to disclose commercial rationale, why we are entering into this transaction, and then how the proceeds, the money which will flow in, how that will be utilized. Now there is an exception to this. Exception is sale, lease or dispose of to wholly owned subsidiary whose accounts are consolidated, provided wholly owned subsidiary is restricted from further selling, leasing or disposing of unless aforesaid public shareholders of listed entity pass special resolution. So now what has happened is that if you want to dispose of an undertaking, then you require unrelated public shareholders special resolution. But suppose you say I am transferring this undertaking to my wholly owned subsidiary, then this is allowed. But then your intent is that after you sell it to your wholly owned subsidiary, that subsidiary will sell outside. So to avoid that, if a condition is placed that if wholly owned subsidiary also tries to sell that undertaking, then again this listed entity will require an unrelated public shareholders special resolution. Plus one more thing happens is, suppose undertaking or a property is there, and what we do, we try to sell the shares of wholly owned subsidiary or organization, so that is also not allowed here. So it is written also listed entity cannot sell shares of such wholly owned subsidiary, such means to which we have transferred the undertaking, unless aforesaid special resolution by unrelated public shareholders is passed. So these are there. One more exception is in case such sale, lease or dispose of happens as per agreement with any financial institution or debenture trustee. So as per the terms of a agreement with financial institution, loan agreement, or maybe as per debenture trustee agreement. So there is trust deed, debenture trust deed, and there are certain covenant. Based on that, if this dispose of undertaking is happening, then it is allowed. Now, Regulation 57. Mind that these are four which are immediately applicable effective from 14 June 2023 itself. Intimation to stock exchange if there are non-convertible securities. Now, this is a kind of relaxation. Now, from where it is getting relaxed is that earlier it required periodic intimations regarding status of payment, etc. That is, submit a certificate within 1 working day of interest becoming due, or dividend becoming due, or principal becoming due of non-convertible securities. Okay, so when their interest or dividend or principal is becoming due, so within 1 working day you were required to intimate status of payment to them. Now, plus there were some quarterly disclosure requirements also, means the quarter before the quarter starts and after the quarter ends. So this additional requirement is removed here. So what I have written is plus intimate about interest, dividend, principal obligations falling due during the quarter, at least 5 working days prior to end of quarter. Then similar status disclosure was required to be made after end of quarter within 7 working days. Now, the amendment requires that only one disclosure is required, that is, disclose within 1 working day of it becoming due, that is, interest, dividend, repayment of principal. Other disclosures prior to and post each quarters are removed. So, these are the requirements. So these are which have become immediately applicable. Now we move on to those requirements for which we have 30 days time, so that we can prepare our organization to comply with these requirements effective from 13 July 2023. Mainstream media defined. First is definition is added. What is mainstream media? Next is Regulation 6(1)(a). Compliance officer. Here it provides fill compliance officer vacancy in 3 months. Interim position can also be filled by CS only. It says that you fill the interim position as if you are complying with the requirement of appointing a compliance officer afresh. Those are the words used there. Next is, so now we have cleared 3 months timeline. Earlier there was no timeline, so some people were taking the opinion that for a company secretary appointment we have 6 months time, but LODR was silent. So some people were interpreting it that since for company secretary 6 month timeline is there, but for compliance officer there is no 6 month timeline. Therefore, as soon as a compliance officer resigns, immediately you need to appoint another compliance officer, or else you are not complying with the regulations. So now here clear 3 months timeline is given. Regulation 17(1)(d), Board of Directors. Now what is happening is, effective 31st March 2024, ensure all directors are subject to reappointment by shareholders once in 5 years. Okay, so now there will be no permanent director concept. If completing 5 years, right, suppose on 31st March 2024 there is a director who has already completed 5 years, then reappoint by shareholders, immediately reappoint by shareholders. And this is not applicable to whole-time director, managing director, manager, independent director, certain nominee directors appointed by financial institutions, and there are one or two exceptions are given for nominee directors. So we can safely conclude that all directors will now be required to be reappointed by shareholders in 5 years, each 5 years. Regulation 17(1)(e). This requires that fill vacancy within 3 months, and in case of due to expiration of term, fill immediately if mandatory to fill. So what it means is that suppose someone has resigned or there is cessation due to death or any other reason, then you have 3 months time. But suppose if you are aware that their term is expiring on so and so date, then you can be prepared for the alternatives. So you have to fill immediately. Alternatively, suppose there, if after the expiration of term still the composition of board is not affected, then there is option, you may appoint, you may not appoint, because the composition of board is not affected by that. Regulation 26A, vacancy of KMPs. So here also it is provided that you have to fill the vacancy of KMPs within 3 months. KMPs include Chief Executive Officer, Managing Director, Whole-Time Director, Manager, Chief Financial Officer. Fill in interim capacity also as a fresh appointment. Regulation 27BA. Regulation 27BA. Other corporate governance requirements. So here the amendment is quarterly corporate governance report to also provide details of cyber security incidents or breaches or loss of data or documents. So relating to cyber security, if there are incidents, then we need to report those in our quarterly corporate governance report. Now, I was thinking, this is my personal question, should similar fake website complaints be also reported? Like suppose I have a website and somebody has created similar fake website. My website ends at .com, someone has created with .in, and I filed a police complaint. So will this also become part of corporate governance requirement? You can comment your views and share with me. Next is Regulation 30, Regulation 4 Amendment. Disclosure of events or information. Now, there's major change, or we can say incorporation of new added events or information which is required to be disclosed now. So this is the major portion of these amendments. Here, criteria is given on how to determine materiality of event or information to disclose, that is, alters existing public info or results in significant market reaction, or as the board of directors considers material. So this is what I have pointed out, that this was earlier written clearly. Okay, there are certain things which are deemed material, means you have to disclose all those information and events. Then there is certain things where you have to apply your mind, which I call a test of materiality. So for determining that test whether it is a material information, either we had earlier three requirements: either it alters existing public information, what was available to public, it is altered with this information or event, or it results in significant market reaction. So market if become aware, then they will react significantly. If later on, if this comes out to the market, then they will react significantly. So that becomes material, or as the board of directors consider material. Apart from this, if the board considered that let's disclose this, then that event or information is also material information. Now, here one more point is inserted as follows: event or information whose value or expected impact in value exceeds the lower of. Now, these are the events or information, either their value or expected impact in value exceeds the, they are exceeding what, the lower of these three criteria. Number one criteria is 2% of turnover of consolidated financials. So we will take turnover of consolidated financials, they're 2%, whether it is exceeding this 2%. This is first consideration. Second is 2% of net worth, if positive net worth of consolidated financials. So if in the consolidated financials we have a positive net worth, then we will consider this point. If we have negative net worth, then we will ignore this point. And if there is positive net worth, then 2% of this, whether this value or expected value is exceeding 2%. Then third criteria is 5% of average profits after tax of last three consolidated financials. So we will find out the average of profit after tax figures, okay, of last three consolidated audited financial statements. And then we will check whether 5% of average profits after tax of last 3 years, whether this information or event has the value or expected impact in value of more than 5%. Then if any of these or all of these if triggered, then the lower of this we will take. Okay, if the event is exceeding the lower of this, then that needs to be reported. So this is added now, and this will be useful later on again and again. Any existing such event be disclosed within 30 days. So if there is any existing such event, then it needs to be disclosed within 30 days. Any existing such event be disclosed within 30 days. So if suppose on 13th July 2023 you start identifying your information and event whose impact in value is 2%, exceeding 2%, 2%, 5%, then that needs to be disclosed within 30 days. For all new events, a timeline of 30 minutes from board meeting or 12 hours from internal events and 24 hours for external events is provided. Now this is explored below in Regulation 30 Sub-Regulation 6 amendments. Okay, but we have to remember that earlier there was 24 hours timeline only, and now the timeline is that suppose a matter is placed before the board and board considers it material information based on the criteria given, then after the close of board meeting within 30 minutes disclose it to the stock exchanges. Or if the matter has not come to the board but it is an information or event which needs to be reported and it has generated from within the organization, then 12 hours timeline is given. Within 12 hours you have to disclose. And if it is generating externally, language is that not generating internally, then you need to disclose it within 24 hours. And if you are disclosing thereafter, then also add a reason for delay. So these are the requirements now. So here further is to give effect to the above, one more point is added and certain modifications are done in Schedule 3rd Part A. Part A provides, what is Part A? Part A provides that certain events or information shall be deemed material and do not require to test for materiality. Okay. So now what all are added or amended here? First of all, it provides that acquisitions or agree to acquire, if you agree to acquire, this is also defined what is acquisition. Then this number two is scheme of arrangements. Then third is sale or dispose of any unit, division, or whole undertaking or substantial undertaking. Then is sale or disposal of any subsidiary company, sale of stake in associate company, or any other restructuring. All of the above points are material events to be disclosed. So if there is an restructuring happening in the organization, if there is a scheme of arrangement, if there is a sale of substantial undertaking, or if suppose there is sale of subsidiary company, okay, then sale of stake in an associate company, or acquisitions, we are acquiring something. So all these are material events and these need to be disclosed. And here definition of acquisition is given. Acquisition herein above means that the disclosure be made on following events. What are the events which will qualify to be defined as acquisition? Number one is acquiring control. It's clear you acquired control maybe through agreement or otherwise. If you are controlling an organization, then you have acquired the organization. Straight and simple. Other is that you have acquired 5% or more shares or voting rights. So now you have just acquired 5% or more shares or voting rights. That is also needs to be disclosed. Then if already acquired 5% as above stated, then any change exceeding 2% shares or voting rights, that also needs to be disclosed. Now if the cost of acquisition or price at which shares are acquired exceeds the lower of, these are the same criteria which I shared above. Okay, so now acquisition is defined that these three things are termed as acquisitions: acquiring control, acquiring 5% or more shares of voting rights, and then if you are already holding 5% or more, then change of 2% above or below, then those are required to be disclosed. And next criteria is given that if the cost of acquisition or price at which shares are acquired, okay, exceeds the lower of 2% turnover of consolidated financials, 2% of net worth. If positive, then net, we will check net worth also if it is positive. And last is 5% of average profit after tax of last three consolidated financials. So this is given here relating to acquisition word. So if we are going through acquisition, then you will carefully go through this requirement. Okay. Note 2, sale or disposal of subsidiary and sale of stake in associate company shall mean. What is the meaning as stated above? These points came above that these also are material events which require to be disclosed. But what do we mean by sale or disposal of subsidiary, sale of stake in associate company? That is agreement to sell, whereafter, okay, such an agreement to sell based on which what is happening, it ceases to be wholly owned subsidiary. Okay, our subsidiary earlier was wholly owned subsidiary, now it ceases to be wholly owned subsidiary, means certain stake or all is disposed of. Number two, it was a subsidiary, means I was not having 100% shares, but it was my subsidiary, I was having more than 51% shares. If it were only subsidiary and not a wholly owned subsidiary. So in this case, if it was a subsidiary, then it ceases to be a subsidiary. That means sale or dispose of subsidiary is triggered. And now third is it ceases to be an associate company. So earlier it was an associate company. I was having 26% stake, and now that has fallen. So it ceases to be an associate company. Or apart from all these conditions, what is happening is there is an agreement to sale. Okay, there is an agreement, but these three conditions are not directly triggered still, whereafter the amount of sale exceeds the lower of. Now these are same which we are revising from earlier 3 points, means the value, we will check the value in the agreement. Okay, sale and the value exceeds the lower of 2% turnover of consolidated financial statement, 2% net worth if net worth is positive of consolidated financial statements, or 5% of average profit after tax of last three consolidated financial statements. So if we are seeing that there is a sale or there is scheme of arrangement or restructuring or acquisition, then we need to carefully go through this requirement and make the disclosures as may be applicable. Other amendments to Schedule 3rd are as follows. Now these are other more amendments. So earlier it was given that any change in rating needed to be disclosed, but now it is written that if we are taking any new rating, then that also requires to be disclosed. Earlier any change in rating was mentioned to be deemed material and be disclosed. Now words are added to reflect that along with any change in rating, if any new rating is taken, then that will also be deemed material and be disclosed. Policy of materiality. Now see, if you have to figure out in between that if you are getting bored, then you can pause this video, you can watch it at 1.2x, 1.25x or 1.5x higher speed, so that you go through it completely, and if something is important, then slow down, come down to 0.5 speed and understand that, read that part. So that flexibility is possible. Okay, if you are losing concentration, then you can pause it, have a break and come back and start afresh. That is also possible for you. Now moving ahead, I will continue it because I have to maintain the timeline also. Policy of materiality of event or information be amended by inserting above point and make this policy available to relevant employees of company. Okay, means listed entity, so that they can identify potential material event or information and inform to the authorized KMP, whose name is already disclosed to stock exchanges or on company's website also for this purpose. So now this policy of materiality of events or information, now this will require to be amended by the company and taking into account all these considerations, and it is mentioned that these are required to be made available to the relevant employees, okay, who are having access to such events or information which may occur and they become aware of the same, and then those employees are required to intimate it, inform it to the authorized KMP, okay, who has to make this public, who has to ensure that this comes to the knowledge of stock exchanges. Regulation 36 now replaced earlier requirement of disclosing event or information as soon as possible within 24 hours, else explain reasons for delay along. Now the new requirements are, now what are the new requirements? Earlier it was straight disclose in 24 hours or justify or explain the reason for delay. Now this timeline has changed. It is saying material events of or information, it is not of, it is or information, be disclosed as soon as possible within 30 minutes of board meeting in which decision pertaining thereto is taken. Okay, if matter is presented before the board decides that yes, this is material, so intimate within 30 minutes. 12 hours of occurrence if emanating from within the organization, and then if the information or event is emanating from outside the organization, that is not within the organization, then disclose within 24 hours of becoming aware. Otherwise explain the reason for delay also. If we are delaying from these timelines, then reason be also given. Regulation 3011. Earlier the company had the option to confirm or deny any reported event or information. Now inserted that for top 100 listed 1st October 2023 effective, and for top 250 listed companies effective 1st April 2024, they shall mandatorily confirm, deny or clarify any reported event or info in the mainstream media. Okay, so if there is an information, okay, a reported event, if there is already reported event or information, okay, then the company earlier had option whether it can confirm or it can deny or it may not do anything, but now they have to mandatorily respond to the reported event or information. Now this is applicable for top 100 listed companies from 1st October, and then for top 250 companies it will become applicable from 1st April 2024. Regulation 30, Sub-Regulation 12. If an event or info is required to be disclosed pursuant to receipt of communication from any regulatory, statutory, enforcement or judicial authority, then the listed entity shall disclose receipt of such communication along with disclosure of event or information. Only exception is if such authority itself prohibits disclosure of such communication from the authority. So now here what is happening is that if any regulatory authority requires you as per its regulation, or it writes to you that you need to make this information public, then you will have to do it. But how will a company do it? Company will say that we have received this communication from this authority, this statutory authority, this enforcement authority, this judicial authority, and based on that I am reporting this to public. Now suppose if that authority prohibits you that do not disclose that I have asked you to report this to public, report this to stock exchange, then you will directly make the information public without any mention of that particular authority. Next is Regulation 30A. Now this is new insertion. Disclosure of certain type of agreements binding the listed entity. So here we have certain agreements and I will disclose what are those agreements. But what is given is that there are certain agreements specified in clause 5A. This is also newly inserted of para A of part A of schedule 3rd. Schedule 3rd relates to deemed material events. And part A relates to that it will be mandatorily deemed material event. There is no say, there is no checking, there is no test whether it is material or not. So now there are certain agreements which are deemed material and listed entity is not party to such agreements. Okay, listed entity is not party or neither confirming party to such agreement. However, who is party then? Shareholders are party. So now this is an obligation on the shareholders of the company. Now listing regulation has gone beyond the listed entity or people inside or directors. It is covering now shareholders. Okay. Then promoters. Promoter is fine. Promoter group entities. So group entities are also covered. They need to report to listed entity that see this agreement exists. Related parties. Okay, there are related parties. Directors, though these are part of that agreement, but listed company itself is not part of that agreement. It can happen that shareholders have an agreement on the control and working of a company and that company is not party to that agreement somehow. Directors, KMPs, employees, even employees can be party to such an agreement of listed entity employee. And now beyond listed entity, these people of holding company, these people of subsidiary, these people of associate companies, all these might be party to an agreement and listed company is not party to that agreement, are party to such agreements. Then they need to disclose this to listed entity. That is an obligation cast on them. Then listed entity will become aware, then it will disclose to stock exchange and also it will disclose on its website, publish on its website. Now what are such agreements? So it is defined that agreements which ensure that listed entity shall act in a particular way or shall not act in a particular way. Okay, so somehow they have a control on listed entity without listed entity itself being party to it. That is, which binds listed entity directly or indirectly, which impact the management or control, impose restriction or liability on listed entity. This is inserted in Schedule 3rd as Schedule 3rd Part A, Subpara 5A. Once they disclose to listed entity, then listed entity to disclose this to stock exchanges and upload on its website. Listed entity to also provide summary in annual report 2022-23 or 2023-24. So this needs to be disclosed in a summary needs to be disclosed in annual report. Schedule 5th, which contain disclosures to be made in annual report, is also amended, and disclosure of such agreement need to be made in the annual report of listed entity. So this impact is coming on annual report. See, if you observe, then there is impact on our policy of materiality of information or events to be disclosed. There is impact in annual report, like this needs to be, if there are such agreements, then these needs to be uh, mentioned in the annual report. Then something will affect our quarterly corporate governance report, as we saw in the starting, which is immediately applicable, that if there are security concerns or threats, okay, and loss of data or information something, then that will become part of quarterly corporate governance report. And on annual corporate governance also there is requirement, which will come later, that if there is change in senior management, then that needs to be reported. Okay, so these are certain things which will affect our various reportings. Further amendments in Schedule 3rd are Schedule 3rd Part A, Para A, Subpara 6. This is substituted. Earlier, it provided that fraud or default by listed entity or key managerial personnel or promoter or arrest of key managerial personnel will be deemed material and be reported. So this was the requirement of earlier requirement. Now this is enhanced. Now the new requirement is fraud or default by listed entity or key managerial personnel KMP or promoter or director is added or senior management is added. And if we recall, earlier in April, the definition of senior management was replaced and required that all the departmental heads by whatever name called will also form part of senior management. So policy was required to be amended and must have been signed by all the senior management as an annual acknowledgement of the same. So senior management or now fraud or default by all these, or subsidiary, even subsidiary is covered for fraud or default, or arrest of KMP, and now arrest of director is covered, arrest of senior management is covered, or arrest of promoter is covered. Whether occurred within India or abroad will be deemed material and be reported. So all these needs to be reported. Here word default means non-payment of interest or principal on due date. So default means non-payment of interest or premium. And default by director or KMP or senior management or promoter or subsidiary shall mean which may have impact on listed entity. So now the words are added that if they have done default, their payments are delayed. So is it affecting the listed entity? If it is affecting the listed entity, then it needs to be reported. Also note that in case of revolving facilities like cash credit, an entity, a listed entity or promoter company or subsidiary company, okay, listed entity or promoter company or subsidiary company would be considered to be in default. Okay, when in case of revolving facility, they will be considered to be in default if outstanding balance remains continuously in excess of the sanctioned limit or drawing power, whichever is lower, for more than 30 days. Okay, my personal note is that ensure this is communicated and discussed with accounts team. So I've just inserted a disclaimer that discuss with your accounts team, because as they will be better judge and they will know this firsthand whether this is happening or not. Now schedule third part A, para A, subpara 7. Earlier, what was earlier? Earlier was it provided that change in director or key managerial personnel, that is MD, C, Chief Executive Officer, Chief Financial Officer, Company Secretary, etc., or auditor or compliance officer will be deemed material and be reported. If these are changes, then these are to be reported. Now, change on senior management is also included in the above list to be deemed material and be reported. So now, as we have incorporated more designations, more people in senior management, then if there is change, then that also needs to be reported. Next is subpara 7c inserted. This what is here. In case of resignation of KMP, key managerial personnel, senior management, compliance officer or director, okay, there is resignation, then letter of resignation along with detailed reasons for resignation as given by them shall be disclosed to stock exchange within 7 days from the date of such resignation comes into effect, which means that if notice to resign is received, then with notice duration we need not disclose. Once 30 days or timeline, 3 month timeline, whatever it is, that timeline has expired, person has resigned, then within 7 days we need to disclose, and we need to obtain a detailed reason from that person who is resigning. That needs to be disclosed. The next is subpara 7d inserted. If managing director or chief executive officer was indisposed, okay, so if he was indisposed means unable to work or not willing to work or unavailable to fulfill the requirements of the role in a regular manner for more than 45 days in a rolling period of 90 days. So if managing director or chief executive officer was indisposed, that is unable to work or not willing to work or unavailable to fulfill the requirements of the role, okay, in a regular manner, normally how he operates, he is not able to do that for more than 45 days in a rolling period of 90 days. The same along with reasons shall be disclosed to stock exchanges. Here, specific timeline not mentioned. Therefore, can we assume that 30 minutes from board meeting or 12 hours or 24 hours timeline, 12 hours generating internally, 24 hours for external factor timeline needs to be followed? This perspective needs to be explored. You can add your views in the comments. Plus, I think that just like we had some point which should be shared with accounts team, this might be required to be shared with HR team. Okay, so you amend the policy, share with HR, highlight this that you will require their inputs on this particular point. Now next is subpara 15a amended. Earlier, it only mentioned that disclosure be made of schedule of analyst or institutional investors meet and presentations made by listed entity. Okay, now timeline is given for that meet, investors meet. For presentations, disclosures timeline are properly provided. That is all sorted. However, for investors meet, disclosure timeline of 2 working days prior is now added. And similar amendment was for disclosure in separate section of website of listed entity. So you will disclose it 2 working days prior about your investors meet, schedule of analyst or investors meet, and then you will upload in a similar fashion on at the same time on your website also. That is prior 2 working days prior. Now schedule third subpara 18 inserted. If any director or KMP or senior management or promoter of listed entity makes an announcement or communication through social media intermediaries or mainstream media, and if such announcement or communication relates to any material event or info, and if such material info or information is not already made available in the public domain by a listed entity, then the disclosure relating to same be made. So here is that if a director, KMP or senior management have made something public, announced something in social media, okay, in mainstream media, and that information is material information which company has not disclosed publicly, so that disclosure needs to be made immediately. Okay, now moving ahead, we have subpara 19 inserted. Disclosure needs to be made to stock exchange if action is initiated or order is passed by any regulatory, statutory, enforcement authority or judicial body against listed entity or director or its KMP, key managerial personnel, or its senior management or its promoter or its subsidiary in respect of. So now disclosure is to be made of any action initiated or order passed by regulatory, statutory, enforcement body or judicial body against whom listed entity, director, KMP, senior management, promoter, subsidiary also. Relating to what? In respect of search or seizure. Search or seizure is happening. Reopening of accounts under section 130. 130 relates the where as per court or tribunal's order for reason of fraud or misstatement accounts are reopened, or investigation under chapter 14th of Companies Act. This investigation is by central government via Serious Fraud Investigation Office, SFIO. So in these cases, disclosure needs to be made once an action is initiated, when an order is passed by any of these regulatory bodies or judicial body. Okay. Now subpara 20 is inserted. Disclosure needs to be made to stock exchanges for any action taken or order passed by any regulatory, statutory or enforcement authority or judicial body against listed entity or director or key managerial person or senior management or promoter or subsidiary in respect of. Now there is a list given, a warning or caution is given. Okay, action is taken or order is passed. What is done? Warning is given, caution is given. Imposition of fine or penalty. Fine is imposed, penalty is imposed. Suspension, settlement of proceedings, debarment, disqualification, closure of operations, sanctions imposed, any other similar action by whatever name called. So if all this or any of this is happening, then those are required to be disclosed to stock exchanges. These are deemed material information. Next is subpara 21 inserted. Disclose to stock exchange about voluntary revision of financial statement or board's report. So earlier we covered a revision of financial statement under section 130 for reasons of fraud or other things. But now here, if you are voluntarily going by applying to the tribunal, then that also needs to be disclosed. Now we come to part B. So all these were mandatory. What we were discussing so far were deemed material. These are material without applying test of materiality. Now the events which we are talking next is events or information to be disclosed only after testing for materiality. That is 4 criterias which we have discussed above. Means 3 were earlier. Okay, they impact the market will react to it. Okay, not disclosed. So what is available will be turned wrong. A board of directors may decide deem material, and if it exceeds the lower of 3 points are there. So if after applying the test of materiality, these are new insertions, these are new changes where we have to test for material information or event. Earlier it provided that event be disclosed if found material after applying test of materiality on the change in the general character or nature of business brought about by arrangements or strategic, technical, manufacturing or marketing tie-up, adoption of new line of business or closure of any unit, division entirely or piecemeal. So these were certain activities, and if they were affecting the general character or nature of business, then if we find after testing that they are affecting character or nature of business, then those were required to be amended. But now words change in general character or nature of business are removed. So we are directly checking them for materiality, whether they affect the general character or nature of business or not. So the its impact is that we directly test for materiality without checking whether it causes any change in nature of business. Now the new substituted subpara 2 provides that we need to test for materiality on events pertaining to what? We need to check for materiality directly on events pertaining to number one is arrangements for strategic, technical, manufacturing or marketing tie-up. Now earlier it was given in one straight line, but now they have pointed it out into first, second and third. Arrangements for strategic, technical, marketing, manufacturing tie-up, or adoption of new line of business, or closure of operation of any unit, division or subsidiary in entirety or in piecemeal. So if you are closing a division or subsidiary either completely or in piecemeal, then these require to be tested for materiality, whether they will affect materially or not as per those four requirements. And if it passes, then we need to disclose as per the timelines provided. 30 minutes of board meeting, 12 hours generating internally, 24 hours if generating externally. Now, what else? Subpara 5 is also amended, that is events which are to be tested for materiality. Earlier, it is said that after testing for materiality, these agreements and any revision, amendments, or termination thereof be disclosed. There are certain amendments if uh, they are found to be material, or if there is a revision or amendment or termination thereof, then these were required to be disclosed. What are these agreements? These agreements were like loan agreement as a borrower, where listed entity is a borrower, or any other agreement which is binding and not in the normal course of business. So there are some agreements which are binding and not in the normal course of business, then they needed to be disclosed after applying test of materiality. But now words as a borrower is removed. So loan agreement, you are party to the loan agreement, not as a borrower, confirming party or otherwise, or anything, your loan giver. Then if after testing for materiality, if it is found to be a material event or information, then that needs to be disclosed. Its impact is that now loan agreements need to be put on test for materiality even if listed entity is not a borrower, but listed entity is bound by this loan agreement and this loan agreement is not in normal course of business. Schedule 3rd para B subpara 8. Event or info to be disclosed only after applying test of materiality. Now here we start. Earlier, it provided that test of material, event or information be applied on litigation, dispute, regulatory action with impact. Okay, such litigations which have impact, such disputes which have impact, such regulatory action which have impact. But this is not clear. This was somewhat appeared very vague line. Now this is substituted with clearer language. Now it provides that test of materiality be applied on pendency of any litigation or dispute or outcome thereof which may have an impact on the listed entity. So if there is a pending litigation and if it can impact the listed entity, then it be disclosed. If there is a pending dispute and if there is an impact, then it be disclosed. If there is an outcome of such a litigation or such a dispute and if it has an impact on listed entity, then it be disclosed. Okay, next is where we will apply test for materiality under subpara 9 is earlier it provided that test of materiality be applied on fraud or default etc. by director other than key managerial personnel or employees of listed entity. Now director is removed from this. Okay, earlier director was written, now director is removed means maybe because director has been moved from moved along key managerial personnel, that they are deemed material. So now this provides that test of materiality be applied on fraud or default by employees of listed entity which has or have an impact on listed entity. Okay, if a director or KMP is concerned, then they already are deemed to be reported. Part B, para 11, subpara 11. Now here we have to apply earlier test of materiality was required to be applied on giving of any guarantee or indemnity or becoming a surety for any third party. Okay, so in that case, if we are giving a guarantee or indemnity or becoming a surety of any third party, then test of materiality was required to be applied. But now there is not much change, only the words are added by whatever name called. So you are doing a similar thing, but you are changing the name of the document. So by whatever name you are doing this, you need to disclose. This is the only insertion. Now the same is retained and words are added by whatever name called. Therefore now it means that the test of materiality is required to be applied on giving of any guarantee or indemnity or becoming a surety by whatever name called for any third party. Schedule 3rd, Part A, Para B, Subpara 13. Similar testing of materiality. New point is added. Now test of materiality needs to be applied as to whether info be disclosed to stock exchange or not on delay or default in the payment of fines, penalties, dues, etc. to any regulatory, statutory, enforcement or judicial authority. So if certain fine is imposed on the organization, then organization will test whether this fine amount is material, and if it is falling in that criteria, okay, there are certain values given, they are exceeding those values found material, then those need to be disclosed, or it was presented before the board considered it to be material, then disclose. If later on market becomes aware this was fine imposed on you and it can cause a reaction in the market, disclose. Okay, so we will apply those 4 tests, and if the fines, penalties or dues, even dues, now regulatory authorities or any statutory authority, enforcement authority, there are certain dues or maybe annual fees which is pending on regulatory or these authorities, specific authorities, this should be clear, then those be tested against materiality. There are penalties, then those be tested for material, whether it is material event or information to be disclosed or not. So we have to test it. Regulation 31B, special rights to shareholders. Now if shareholders are granted any special rights, if granted, then will be subject to approval by special resolution once in every 5 years. Now we have moved beyond disclosures. Okay, this is a separate fresh provision, regulation 31B. What it says that if any special rights are granted to any shareholders, then will be subject to approval by a special resolution once in every 5 years. Okay, earlier we have discussed that every director will be subject to approval by shareholders in every 5 years, and now special resolution is required in once in every 5 years for any special rights to any shareholders. Exemption to public financial institutions and debenture trustees. So if there are any covenants and they have any special rights, acquired some special rights, then those are exempt. Regulation 33 3 and J. In this regulation, earlier, what is this regulation all about? So this regulation was about financial results be provided in 45 days or 60 days timeline as mentioned. Now in this something is added. This is only for newly listed organization. So if you are newly listed organization, then this is of concern to you. Newly listed company shall comply with 45 days or 60 days condition for its next financial post listing or submit the same within 21 days, whichever is later. Now, website related point. Website was earlier it provided that on a functional website in a separate section, listed entity shall disseminate information as to schedule of analyst or institutional investors meet and presentations made therein. Now words have been inserted to mean that listed entity to disseminate info as to investors meet at least 2 working days in advance. So I covered this earlier also when we were saying that this needs to be disclosed to the stock exchanges. And now this point related to website of maintaining functional website. So this should be uploaded on our functional website at least 2 working days prior to the schedule of investors meet. Then we come to the conclusion. Schedule 5 Part C subpara 5b inserted new insertion. Annual report disclosure. This disclosure needs to be made in the corporate governance section of annual report. I talked about this earlier also. Disclose about senior management, that is particulars of senior management including changes therein since the close of previous financial year, that is changes effective 1st April. So just like we disclose changes in directors of the company, similarly we have to disclose changes in senior management of the company. So this needs to be disclosed in annual report and in the annual report under corporate governance section. So these are all I've tried to comprehensively covered everything in the as simple as way possible for me. Still I repeat, if I will find that what I spoke was wrong, I can commit mistakes or blunders even. So I will try to say, make amendment or suggest my amendments in the description box or in the comments. I will prefer to put in the description that this I had disclosed wrongly in this video. And still, I look forward to your feedback, your comments. And I'm always open to learn and explore. And if you want this presentation, you can email me or WhatsApp me also. All the best. Take care.